Hello everyone, welcome back. We are solving 2025 Major paper 12. This is the second part of the video, so we will be solving from question number 11 to 20 today. Question number 11. A debit balance of 2600 was shown for the bank in the cash book of a business at the end of the month. The bank statement included bank charges of 1200 and interest received of 500, both of which had not been entered in the cash book. The bank column of the cash book had been overcast by 200 and the cash book included a payment of 800 which had not yet appeared on the bank statement. Question is, what was the credit balance shown on the bank statement at the end of the month? So here they give us the debit balance in cash book, that means the positive balance, and here they're asking us what is the credit balance in bank statement. So bank statement credit balance means also the positive balance. So in basic they are asking you the balance we have in the cash book is this. After all this adjustment, what will be the balance in the bank statement? Very simple. So we'll start with bank amount here. Let's write this as my opening balance or cash book balance, that is 2600. Now first one, it says the bank statement include bank charges of 1200. Now if I want to find out bank balance as per the bank statement, then this charges needs to be taken into consideration, and this charges is 1200, so we'll simply subtract this. Okay, bank charges 1200, and then it says and we received interest of 500, so that also needs to be included. So interest received of 500. Then it says the bank column of the cash book had been overcast by 200. So this amount that we have in the cash, this is overcast by 200. So we need to subtract this. Overcast of 200. So let's subtract that. And then finally it says the cash book include a payment of 800 which had not yet presented on the bank statement. So when I wrote this 2600, I subtracted 800 against the payment. Okay, but this payment has not yet appeared in the bank statement. That means when we calculate the bank says that 800 is not deducted yet from your account, so we'll add back. Okay, 800. We will say not yet presented. Okay, so if I do add and subtract all of this from the opening balance, the balance that we have is 2500, and this is as per bank statement. Bank statement. So this is our correct answer. For 11, question answer is 2500 C. 12. Why is a sales ledger control account used? Number 1, to control discount received, to ensure credit customer pay promptly, and to provide a trial balance figure for the trade receivables. So sales ledger control account is prepared at the end of the financial year, and its main use is to identify or detect arithmetical error. And once you prepare the control account, the total can be used in the trial balance for trade receivable. So sales ledger control account provide trade receivable balance. Purchase ledger control account will provide trade payable balance. So correct answer for 12 is 3, and that is the only option. So D, 3 only. 13. A bookkeeper is given a task of reconciling the sales ledger control account with balance in the sales ledger at the end of each month. The sales ledger control account shows a debit balance of 2600 before the bookkeeper discovered the following. So right now in the control account we have 2600 and there are few errors we need to take into consideration. Number one, contra entry of 1800 in the sales ledger has been omitted from the control account. Then discount allowed of 3600 has been debited to the sales ledger control account. And the last one, an allowance for irrecoverable debt had been increased by 1200. What is the correct figure of trade receivable at the end of the month? So we need to correct these errors to calculate what will be the correct figure as per the sales ledger control account. Now here, if I prepare a control account, then your control account has a debit and the credit side. This is the sales ledger control account. So balance will be on this side. And that amount is 26,000. Okay. Then the first adjustment is says a contra entry of 1800 in the sales ledger control account as in the sales ledger had been omitted from the control account. So a contra entry basically means we need to subtract amount both from sales ledger control account as well as from purchase ledger control account. Okay, and in sales ledger control account, this is when you add and this is when you subtract. Okay, so debit side is when you adding the balance and credit side is subtracting the balance, because this is your trade receivable in simple words. So control account has a 1800 which is omitted from the books, and that is a contra entry, and contra entry will be written on the credit side because this is the amount that we adjusted against our trade payable. Okay, for example, there is a customer called A. He is your trade receivable and same customer is your trade payable as well. So you owe him, let's say 2000, and then he owe you 1800. Now in this process, if we want to settle this transaction, first I need to pay him 2000 and then collect from him 1800. Now instead of doing that, I can simply pay him 200 from here. Okay, and 1800 will be deducted from both trade receivable and trade payable. Okay, so minus 1800. Now I'll say I have zero amount to receive, and then from here minus 1800, and I say now I have only 200 to pay, so I'll pay 200. So this entry that we just made is called contra entry, okay, which is subtracted both from trade receivable and trade payable account. So that's why we are subtracting from the control account that amount. Next, discount allowed of 36 has been debited in sales ledger control account. So discount allowed will decrease your trade receivable balance, so we should write it on the credit side. But instead of writing it on the credit side, I wrote it on the debit side out here, and that entry was somewhere before this total was made. Okay, and now if I write that amount 3600 here, this will only cancel out the previous incorrect entry that we made on the debit side. Okay, so I need to add another 3600 to actually subtract discount allowed from my trade receivables. Okay, first 3600 will cancel out the incorrect entry, and second 3600 will be recorded as discount allowed on the credit side. Okay, and then the last one is then allowance for irrecoverable debts had been increased by 1200. Remember, the allowance for irrecoverable debt will not be recorded in the control account at all. This will be recorded when we prepare statement of financial position to show how much is my trade receivable balance, okay, or the difference, which is last year irrecoverable debt and this year irrecoverable debt, will be recorded in statement of profit and loss account but not in the control account. Okay, so let's calculate the total on the credit side here. Credit side is 9,000 and the debit side is still 26,000. So difference out here is the balance or the correct balance we should have in the control account. And 26 minus 9,000 will give you 17,000. Okay. And this is our correct answer. For question number 13, 17,000 B. Let's go to 14. A business paid 5,750 during its trading year for advertising. This amount includes 500 in respect for the next financial year. So 500 is a prepaid amount for next year. So what is the treatment of this 500? That's what they're asking you. Okay. So this is a prepaid. Prepaid expense is your asset. So we need to write it under our asset. And then advertisement expense, which is 5,750. From there, we need to subtract 500 because this is not this year's expense. So as per the accrual basis or matching concept, we need to subtract prepayment expenses. Okay. So now if I look at here in the profit for the year, expense is decreasing. So profit will increase. Either the answer is C or D. Okay. And this 500 which we excluded from expense will be returned as your asset. So your asset will increase. So net current asset will increase by 500. So your correct answer is for 14, increase in the profit because expense is decreasing, and increase in the net current asset because prepaid is increasing. Okay, prepaid expense means asset. So 14D. 15. The book of business shows the following balance at the end of financial year on 31st December. Trade receivable 18,820. Allowance for irrecoverable debt 760. The following adjustments needs to be made. An irrecoverable debt of $470 which was written off in the previous year had been recovered. No entry of this have been made in the financial statement. So there's a 470 irrecoverable debt. We wrote it off last year. Now this is recovered. So this entry is not made. Number 2, an irrecoverable debt of 680 needs to be written off. So this year the irrecoverable debt would be 680. That needs to be taken into consideration. And number 3, an allowance for irrecoverable debt is to be 5% of trade receivable. So this is the irrecoverable debt. This actually happened and we are creating an allowance which is the 5%. Okay. Now let's do the calculation for this. First we'll start with the trade receivable balance we have. Okay. So trade receivable balance that we have is 18,820. Now, then we need to calculate what will be the allowance for this year. Okay, so in order to calculate the allowance, first I will subtract what is the irrecoverable debt that took place after this. Okay, and irrecoverable that took place is 680. So, irrecoverable amount is 680. That I will subtract. And now this is the remaining balance of trade receivable that we have. Okay. When I calculate provision or allowance for irrecoverable debt, we need to calculate on this amount. So, current year irrecoverable debt is 5% of this amount. So, into 5 divided by 100. So, which is 907. So if you look at here, last year allowance for irrecoverable debt was 760. This year allowance for irrecoverable debt is 907. Okay, and last year irrecoverable debt amount is 760. So the difference is my expense. Okay, so this minus this, so 147 is my expense, because I only have 760 in my irrecoverable debt account, but I want to make it as 907. So this would be a charge against profit. So the difference of 147 needs to be taken out from my profit to put it as my irrecoverable debt. So this is my expense. And this year irrecoverable debt was 680. That is also my expense, which is 680. And last year we consider irrecoverable debt of 470. So last year it was considered expense, but now we are receiving this money this year, so we'll consider this as our income for the year. Okay, 470. Now this will give you how much amount you'll add and subtract in your profit. So basically we will subtract 357 from our profit. So right answer is for 15, 357 expense, C. Question 16. After preparing the financial statement of a sole trader, the following items were discovered. Number 1, drawings consisted of goods taken for own use at their sales value 12,000. The owner applied a markup of 50% on all goods sold. 2, profit for the year included an insurance expense 7,500. 1/3 was for the owner's health insurance. Okay. What is the effect on the profit for the year after correcting these items? Okay, let's understand this. There is revenue, and in this revenue we subtract cost of sales, and when we subtract cost of sales we'll get profit or gross profit. So for now let's understand this as your just a profit. Okay, it would be easier. Now question is, if my cost of sales increases or decreases, or revenue increases or decreases, this will directly impact my profit. Why I'm telling you that is, the first error is says there is a goods taken for own use and the value was 12,000. So while calculating your cost of sales, we include the drawings of goods. Okay, cost of sales is basically opening inventory. Okay, and then we have purchases. Now in this purchases we'll subtract less drawings. If we withdrew goods from the business, then we will subtract it from the purchase. Okay, the problem out here is that we subtracted 12,000, which is the sales value. Okay, and we should have been subtracting it at cost. So here in drawings we wrote 12,000 and then we subtracted that, but it should have been at cost. Let's try to understand with the help of a number. Okay, let's say company has a purchase of 80,000 and then they subtracted drawings as 12,000. Now their cost of sales is 80,000 minus 12,000. Okay, I'm not taking into consideration opening inventory and closing inventory for the ease of calculation. So I'm saying my cost of sales is 68,000, and right now let's assume our revenue is 100,000. So I calculate my profit as revenue minus cost of sales, and which is 32,000. But what I'm saying is we should not include drawings at sales value. We should include it at cost. Okay. And how do I know this is included in the selling price? Because it's mentioned that sales value is 12,000 and the profit he includes is 50% markup on all goods he sells. Okay. So here let's calculate how much profit included here and what will be the cost. Okay, so they give us sales of 12,000 and they give us the markup of 50%. But we have a sale, so we cannot use this 50% to calculate profit out here. We need to convert this markup into margin. So if you convert markup into margin, margin would look like 50. 50% means 50 divided by 100. So this is 50 divided by 100 plus 50. Okay. Now this is how you calculate margin percentage from markup to margin. So let's calculate the profit included in this sales. So the profit included out here is this into this. Oh, sorry, I am not been able to do that. Into 50 divided by 150. Okay, 100 plus 50 is 150. So 4,000. Profit included out here is 4,000 and I'm saying that it should have been included at cost. So the cost out here is 8,000. 12,000 minus 4,000. Okay. Now let's see what will happen if we include it at cost. So revenue is still 100,000. Okay. And purchase is still 80,000. But now the drawings will be recorded as 8,000 and not 12,000 because that is the cost of the drawings. And this will increase my cost of sales, which is 72,000. Okay. And now if I calculate the profit, sales minus cost of sales, revenue minus cost of sales, which will give you 28,000. Do you see that? Now profit will decrease, and if I calculate the difference out here by 4,000, I guess. Yeah, profit will decrease by 4,000 because we included this profit amount also here in the cost of sales and subtracted from the cost of sales. So now if I remove that one, then my cost of sales will increase and this will lead to decrease in the profit. Okay, so first adjustment will decrease the profit by 4,000. Second one, the profit for the year include an insurance expense. This is an expense, so will decrease the profit, but 1/3 of this expense is for owner's health insurance. So it is a personal expense, should not be included in business expense. So if you look at here, 7,500 and 1/3 of 7,500 is 1 divided by 3. That will give you 2,500. So 2,500 should not be the expense of the business. So if my expense will decrease, my income will increase. So income will increase by 2,500. Make sense? Okay, here my profit will decrease by 4,000 because my cost of sales will increase and which will lead to decrease in the profit. And here my expense will decrease, which will increase the profit by 2,500. So this will decrease my profit and this will increase my profit. Okay, so this is less and this is add. So overall 2500 minus 4000, overall 1500 will be subtracted because of this from my profit. So what is the effect on the profit for the year after correcting these items? So 1500 will decrease. 16A. 17. L and M are in partnership. Which item should appear in partnership appropriation account? So when we prepare the appropriation account, what do we write? First one, additional capital contributed by M. This will be written in the capital account, not in the appropriation account. Then cash drawings of L and M during the year. This will be directly recorded in the current account of a partner. And number C, salary due to L. Yes, the salary is a part of appropriation account. All the partner salary, interest on capital, interest on drawings, share of profit will be recorded in the appropriation account. And last one is salary paid to M's sister. If it is for M, it will be recorded in appropriation account, but it is a M's sister, so we are considering that she is an employee. So we'll record this in a statement of profit and loss account and not in appropriation account. Correct answer for 17 is C, salary due to L. Okay, 18. Valeria and Paul are in partnership, sharing profit and losses in the ratio 5:3 respectively. The partnership profit for the year was 250,000. The appropriation account of the partnership for the years include the following information. Total interest on partners' drawings 12,000. Total interest on partners' capital contribution 18,000. So what was Paul's share of residual profit? Simple. We'll prepare an appropriation account extract. So this is your profit for the year, and profit for the year is 250,000 given in the question. Okay, here. Then in appropriation account, first thing that we do is we'll add interest on drawings. Interest on drawings, total the asset is 12,000, so we'll add 12,000 here. And now this is the total profit that we have after the adjustment. Okay, 262,000. Now this amount will be distributed among the partners. So first thing that we subtracted out here is less interest on capital. Okay, interest on capital total 18,000 was subtracted. So in normal case, we will calculate how much is for each partner, but here total amount is already given to us, so we'll just write that amount. So after this is the available amount. Okay, this is the amount that is available for us to give it to the partners as residual profit. And for Paul, the profit sharing ratio is 5:3. So this is 3 out of 8. So for Paul, 244,000 into 3 out of 8. So addition of this is ratio is 8. So let's calculate that amount. Into 3 by 8. And that is 91,500 is fall. We need to calculate for the other partner as well, but question was asking only this one, so our answer is 91,500 which is B. Question 19. Which item will be shown in the company's statement of changes in equity? When you prepare a statement of changes in equity, what are the things that you'll write? Now, if you remember the format in the statement of changes in equity, we write down shares or ordinary share. Let me just write down shares. Then we'll write down capital reserve. Okay, capital reserve like premium and revaluation. Then we'll write down revenue reserve. Okay, and revenue reserve like general reserve and retained earnings. Okay, so these four things. And in this question, first one is a bonus issue of ordinary shares. So when we issue bonus shares, we record it in a statement of changes in equity. We'll take out money from the capital reserve and revenue reserve and put it into the shares or ordinary shares. Issue of debenture. A debenture is a loan, long-term liability, so we do not record it in a statement of changes in equity. And a proposed dividend of ordinary share. So when we are giving dividend, we should record it, but this is only proposed dividend. So in a statement of changes in equity, we write paid dividend and not proposed dividend. And then the fourth one, an upward revaluation of company's non-current asset. Yes, when we revalue non-current asset, the increase or decreasing the value should be recorded in the revaluation reserve. So this is recorded out here. For your 19, correct answer is 1 and 4, which is B. And question 20. The table shows a company's equity, ordinary share of $1 each, 200,000. Then share premium 80,000, revenue reserve 160,000. Okay, revenue reserve includes general reserve and retained earning, but they did not segregate that, so we assume there is only one revenue reserve. First one is a 1-for-1 bonus issue of ordinary share. So first we give the bonus shares, and then after that a right issue of 100,000 ordinary shares of $1 each at 1.40 per share. So we'll give it at premium. So calculation is very simple for this. First one, we have shares, and then we have premium, and then we have reserve or revenue reserve. Okay, so this is 200,000, then the premium is 80,000, and the general reserve is, or revenue reserve is 660,000. Okay, now before we make that, it also mentioned that the company wished to maintain the reserve in most flexible form. First one, we give bonus shares. Okay, when we issue bonus shares, we need to find out how many shares we are giving. So here 1-for-1 shares. So if you look at here, we have total altogether 200,000 shares because each share value is $1. So if I divide 200 by 1, I'll still get 200,000. So we are giving them 1-for-1 share. That means additional 200,000 shares. And when we issue bonus shares, we'll always issue them at the face value, okay, which is $1. So 200,000 bonus shares we give them, and at a price of $1 each. So that means total amount we required is 200,000. Okay, bonus shares we are giving 200,000 total. Now we need to take this money out from the reserves that we have. First we will use the capital reserve, which is the premium. So 80,000 from here. but this is not enough. So we need 120,000 more that will be used from the revenue reserve. Okay, so we are transferring the reserve into capital. We give them bonus shares. This is given at free of cost. So we transfer the fund from the reserve to shares. And then we issue right shares. This question said that we are issuing 100,000 right shares of $1 each at 1.40. So the value of right share is 100,000. Now this would be bifurcated into the share amount and the premium amount. Okay, so share amount is at face value, which is $1, and remaining, which is 40 cents, will be for premium, because the $1 share we are issuing at 1.40, so 0.40. Okay, this is for the premium. So $1 into 100 will give you 100,000. So 100,000 in the shares, and 100,000 into 0.4 will give you 40,000, that will go in premium. Okay, so let's calculate the closing balance that we have in each of this account. 500,000, 40,000, and 40,000. So in shares we have 500,000, premium 40,000, and then revenue reserve 40,000. Question was asking you, what will be the equity in the company? So the correct equity is ordinary share 500,000, share premium 40,000, and revenue reserve 40,000. Correct answer is A for question 20. Okay, so this is the last question for today. If you have any question, please comment and I will get back to you. Happy learning and have a nice day.